Here's the 5760. Let's start over again. All right. I have a visual. I have audio. Everyone's like, man, this guy. I'm sure my team members right here are saying, what is happening? I see that I have sound. Are we good? There is no sound being played. You can't hear this? All good now. I appreciate y'all having a little grace for me today. Holy cow. All right. This is the morning founder's note. I write this 7:30 in the morning. I took a screenshot of Trace here, and I described what I thought would happen today. And so we talked about this big strike, 5760, and we said what the 0DT people are likely to do is they're likely to add additional calls in the 5750 to 5760 area. Thank you, Rainy Days. And that turns into resistance, okay? And then the second thing was, look, around 5700, 5775, that's going to be a support area based on current positions, but also the behavior that we've seen in Trace the last few days. When the market tests that area, the put sellers come out. The last thing we flagged, we said, look, if we do break 5675, we got to look at this put. There's a fund that has about 10,000 puts, and you can see that right here, that red line. So this was the start of day map. The point here is just saying, again, thank you all for being patient as I get everything worked out here. We get this sorted out. We say, look, this was the 7:30 view. This is not the hindsight view, because anyone can look at a chart and, write a narrative. So let's start back at 8:30. This was when the NFP came out, and you see we rally right into that level. This gray line here is the SPX. So what do? We rise right into that level. And this is where the move stalls out, right in that same area from the founder's note, right at this big strike. The other thing you note is HIRO, which is this purple line starts going up. That tells us that people are buying calls or selling puts to start the day. That's the real-time trading deltas that we're measuring, the hedging impact in real time. And then you can see essentially once the market opens, if I flip forward here a little bit, you see that HIRO is going to drop sharply. That purple line is going to drop sharply. That tells us that the negative deltas are coming in the market. Negative deltas is call selling and put buying. And you can see that the map here gets a much lighter shade of blue. That tells us there's less buying support down below. And the big news of the day, obviously, here is we move straight on down to 5,700. See that? Now, at 5,700, this interesting thing happens. HIRO, which measures people buying puts and selling calls in real time, it stops going down. And that is a fantastic indication of people no longer betting on further downside. So we had the market hit the aforementioned or the pre-market 5,700 support level, and then we see HIRO stop going down. What that tells us is, again, people stopped buying puts at that level. They backed off those bearish bets. So we got a strong bounce off that level, a nice 500, nice 25 handle bounce. If I want to look at only what the key 0DT positions are for today, I hit that slider, and I can see, okay, I got what looks like a little spread here, 5740, 5735, and then this 5700 support area seems like it's still going to hold as a decent support line. What generally happens in this market is that traders come in, right? And when the market rallies, they sell 0DT calls. And when the market falls, they sell 0DT puts. And what that does is it keeps the market in a pretty tight range. And they will do that as long as there's not an obvious risk metric or something to cause risk on the day. What do I mean by that? Today, the big thing was the print this morning, right? The NFP prints, 8:30. That's the only thing people care about. Then it's on to the weekend, right? So that means the 0DT people can come out, do what they want to do. When there's a real vol event in the market or significant risk of vol in the market, then you will see that 0DT liquidity disappear, and that's where we get a lot more volatility. And so that's where I see 0DT mostly impacting markets, is when you see these put and call sellers come in and they offer support and resistance to the market. Now, if you look at this, I'm going to go down to, I'm bringing up my Twitter profile here. Here it is. I just want to show this because we talked about this yesterday. So we saw this happen right here, right? I circled the area where we saw 0DT put sellers, and the market bounced from here, which is right around, well, as you can see here, 315 into the close, right? That was the low of the day. Because these put sellers come in, and when they're selling puts, that helps to lift the market up. Why? Because dealers are getting long puts and they, in theory, have to start buying stock, and you see that play out all the time. Right now, what we're seeing is there's not a big level necessarily right here, but we're seeing HIRO get very negative. So this is people putting bearish bets back on after the market has had a pretty nice, bounce right here. So we're going to look for this 5,700 test area once again. So this is the delta pressure map. The delta pressure map is assuming, just to be clear what this means, look, we assume dealers are delta neutral at this exact moment in time, at this exact price. And we say, what happens? What do they have to do if the market goes up 10, 15, 20 handles, right? What happens if the market goes down 5, 10, 15 handles? What do they have to do? Red means they got to sell. Blue means they got to buy. The second thing you notice here, there are these contour lines. The contour lines are simply there to describe how the heat map is changing. It's easier to see, get an indication of flow by looking at these lines. The lines are kind of sideways right now, which says we're pretty neutral. And if I had to be a betting man, we'd be looking for a close roughly in this area based on delta neutral being in that zone. The second thing is the more stacked the lines are, you can see there's a little more selling pressure, right? Because the lines are a little more concentrated today on top versus the bottom. So it's a very quick indication of what the flow looks like from the delta pressure perspective. So I can turn these contour lines off and you see what I'm saying. Like, it's just, you can read it a little easier with those contour lines and describe the flow a little better. So if I let's flip to the gamma map. The gamma map is interesting because obviously if we have a blue or blue-violet color, I call it blue. Again, it annoys people. You want to call it purple? Go ahead. You can also change your color, by the way, here, so we can change it to something that's less controversial. What you're going to see here is we have a generally positive gamma environment, right? That's what this is telling us. Second, you see stability, 64%. This is a statistically backed measurement that basically says how much volatility essentially are we expecting. We call it stability because most people assign volatility to a sharp move down. But volatility obviously can work in both ways. So is this a stable market or not? It's pretty stable. When you get down into the 30% is where you can really expect much bigger moves. And this is updating constantly throughout the day. So the point here is that if I just zoom out a little bit, what you're going to see is like this overall, even though we're getting a pretty decent amount of movement in this zone, it's a positive gamma, fairly stable environment. And then this is an environment where we'd expect 0 DTE people to come in. Now you can see HIRO's continuing to go down right now. So we're almost at that 5,700 level. Not quite at there, but 57.15, and we're going to be looking for this to be support again. Second thing, if we do dip low enough, we're going to look for put sellers, traders selling puts, dealers buying them to come in this 56.80 area. And I just want to be clear on this too. This map is showing the dealer's perspective, right? So dealers have a positive gamma position. Dealers are long this strike, we believe, 57.60, 5,700, for example. And then obviously we're updating this continuously throughout the day. So those continuous updates, they're absolutely critical because so much flow is 0 DTE. Second, you're obviously getting HIRO updating in real time, which is going to help you navigate as well. So overall, this is a positive gamma environment. And those of you who are trying to say, hey, when does gamma flip to negative? Arguably, not until 5,600, right? Because the map is generally blue in color, as you can see if you zoom out. So this kind of infers there's a decent amount of stability really continuously as we go down. And there's one really big position, as you can see here. You can see it by these candles. So there's a very large short put spread down here. It's only about 10 points wide, but 20 points wide, but you can see it sitting down there. And that's what these kind of flame-looking things are telling you, that the dealers have a put spread on there. All right, checking the comment section, make sure I didn't miss anything. Hannah's asking about this blue line. This is our HIRO indicator. So HIRO is actually we mentioned that it measures deltas in real time. What does that mean? Every single time someone buys a put or sells a call, we measure the deltas, the dealer hedging impact of that trade, and we create rolling sums of those. And the idea is that when you get a lot of bullish flow, you'll see the purple line go up. That tells us that dealers have to buy stock potentially. And if the purple line goes down, they have to arguably sell stock. So you can look at this for all possible options, or you can look at 0 DT flowing only. So when I look at this, I see the purple line and the teal line are overlapped. What does that mean? That means that most of the flow taking place today is 0 DTE. So you go, well, the port strike is gone and NFP printed, so like that's going to unlock all its macro flow. It doesn't appear to have done so, right? Today is just a kind of a 0 DTE controlled day, honestly, is what it looks like. So you can overlay that line on on Trace, and see exactly where those index positions. So that combines SPX, SPY, and ESF. HIRO does to show you that kind of S&P complex flow. You can also switch to what we call the S&P basket for HIRO. That shows you what all the single stock trades are doing. So single stocks today look a lot more bullish, right? So what are people doing in NVIDIA, Tesla, Apple, Coca-Cola, JP Morgan, any S&P 500 stock? Well, they seem to be kind of buying calls, buying options at this moment right now. So overall, this is a very kind of benign environment, right? Positive gamma environment. People are likely to come in. They're going to sell calls above 0 DTE. They're going to sell puts below, and that really stabilizes things. And that's setting up this kind of path of least resistance move. If we look at delta pressure, we can get a first indication of that. Again, we mentioned the kind of 5730, 5720 area, as you can see here. And then the second map we have is this charm map. And charm is really most valuable for assessing end-of-day positions. 0 DTE positions have the highest amount of charm, that is the delta decay. And what that is essentially telling us is, hey, where are 0 DTE positions most impactful to the market? And again, they tend to, that decay picks up most after 3 o'clock. As you can see here, the colors really get much more intense. And what we generally see is that the market will move to these areas where big red and big purple areas line up, where they meet. And so right now you can see there are these positive gamma strikes here that are decaying, offering dealers a little bit of selling pressure here, and there's a little bit of buying pressure up here from decay of positions. And so we're thinking that, generally we'll slide right into this area. So that, again, is the 5730-ish area. So everything is kind of lining up at the moment to show us this 5725, 5730 area as a rough end of day target. Obviously, the maps are going to update continuously as we progress through the day, as we get new trades coming in. And what the models are essentially doing, again, is they're looking above and below current prices to figure out what delta or gamma is. But then we're also looking forward in time, right? So you'll note that, okay, what happens if the market moves down at 3 o'clock? Well, the dealers have about $1.7 billion worth of stock to buy, is what that's telling us. How do I know there's a large put spread on is the question. Let's zoom out a little bit. So while I don't know if these two trades are specifically linked, there's some pretty good information that I have on here. And this is for Larry. Number one, when I look quickly at the map, I see red and purple, right? Or red and blue. And they're right on top of each other, and they're very dark. So number one, when it's dark, I can tell, okay, there's a big position there, right? Because this is a very intense area of gamma. And then two, the fact that there's a bright red blob and bright blue blob next to each other tells me, okay, there's a big position on long and short, right? Long being purple, red being short. And so if you hover over this, you can see what the gamma is right there, right? I'm trying to get my pen tool up here again and see if I can draw that a little bit better for everybody. All right, let me know if this helps out. So there's the big blue blob, there's the big red blob, and so you can see these strikes right here. See them? Now, I'm on the gamma by strike map, so you'll note that the gamma of these positions was a lot bigger today, but it's now shrunk. Is that clear? So we're the wick, the end of the wick is telling us the largest that position was in gamma terms today. So you can see how these positions shift. Again, updated, in this case, every 10 minutes throughout the day is how we update the map. Now, I can also see this by open interest. So let me go to open interest. You can see what we think open interest is. So this is what we call synthetic open interest, meaning we're tracking, we've been doing this since January, where we think the dealers and market makers are long and short positions. So you can see right here, Larry, this huge position, right? So there's 15,000 long puts, and over here, 15,000, 13,000 short puts, right? So do I know for a fact that the trader bought this one and sold this top strike, bought this other one, so dealers doing the other side? I don't know for a fact that it was a tie trade, but it sets up very clearly as a spread. And this isn't a terribly wide spread, but it nonetheless, you can look at the map and very quickly tell it's a spread. last thing is I can net the open interest out so you can see whether dealers are leaning long or short. And so this is a 0 DT position, right? Because if I turn this off, excuse me, I've turned 0 DT on, you'll see it. So that's how I know it's 0 DT. This is the other thing about the 0 DT space is that it moves the market. And if you're not watching these positions, then I think a lot of times you could be confused, right? So there's kind of the macro folks out there who are looking at these data points and looking, at the port closures and like, well, why aren't we doing anything? And it's because these big 0 DT positions are coming in and moving the market, particularly when there's not a lot of other flow. There's a lot of people who are out yesterday and today with Rosh Hashanah, and it's the weekend and all that. So look, the options flow is left to kind of enforce itself here. And so that's the critical stuff. So what we'll be looking for here is we see that if anything, this 5,700 strike has grown in the last few minutes, right? And I can wind back just a little bit and show you. So it looks like what people have been doing, arguably, is selling the 5,700 puts. See this? So at 11 o'clock, which is here, that position was about $13 million. And if we go to the end of the day, you're going to see this strike. I can just play it forward. That's what I did, a click play. And so you're going to see this strike grow. So that tells me that this position has increased. Now, gamma is highest for at the money options. So the fact that this position has increased as the market's gone up, that's telling me people are selling those positions. But we can also just go, again, look at net open interest and see exactly what is sitting there. And there it is. This strike up here, the 5760, remains from an open interest perspective the biggest one on the day. This is key if we do happen to rally all the way back. But again, because we are halfway through the session roughly, the gamma at the strike is lower, right? There's the gamma is lower because we're only got half the day left and we're still a good 30, 40 points away from that strike. But if we do, for some reason, rally, that gamma is going to grow again just as a function of the S&P being closer to that strike. Hopefully that makes sense. What are my settings for trace? Great question. So we have a light and dark mode. Some people like the dark mode better. I tend to leave it on light. A little easier for me to see, maybe because my eyes are getting old. I don't know. There's also some different color settings. People have changed their own colors to all sorts of things. Red and green. Maybe you want to go with the Halloween theme. Spice things up. Hey, Henry, what's up? And by the way, I want to say welcome to the Simpler Trading community. We're super happy to have you on board here, checking everything out today. Again, if you want to try out Trace, you can do so for free. You can go here, spotgamma.com/trace-unlocked. I'll put that in the chat. Hopefully you guys can see my chat in there. And it's free. It's open for today, so you can see exactly how all these positions are moving the market. But those are my settings there. And Vikramas, are these the dealer positions? Yes. And so we started tracking positions back in January because obviously, while 50% roughly of volume, 45 to 50% volume is 0 DTE, there's still a lot of positions that are 6 months out, a year out, et cetera, right? So we had to track positions for quite a while in order to make sure we had a full map. The second thing is we must have built 2-3 dozen different lenses. And there's some of our excellent beta users I could see on the chat here that kick the tires on this thing, right? We tried different maps. We tried different models. We looked at statistics, and we really found that these 3 lenses were the most clean and easy to understand and provided the most impact. And our hope with this is that even if you don't really understand yet the kind of dealer hedging dynamics, you know that red is bad, blue, violet is good, and you can navigate things accordingly, right? So when you look at the delta pressure map, okay, red is selling pressure, blue is buying pressure, and then you can start to weigh out exactly how that stuff will impact the market. Obviously, right now, as I said before, this is the delta neutral line, right? So they're selling above, buying below. The map doesn't always look like this, right? It can change quite a bit. And you can also see, which is really interesting, when these 0 DT positions get closed a lot of times, you'll see the market move quite a bit. We've posted some of those past positions on Twitter with little, GIF replays. You can see that. But you'll see something like, hey, someone will close this call, right? So this looks like a spread to me, 57.45, 57.35. You'll see this position will close and HIRO will jump real time. And then the market will react to that. And then a lot of times people say, well, hey, what just happened? Why did the market just jump 10, 15, 20 points? Well, it's because this 0 DTE position just got closed out, and then you'll see the market react to that rather quickly. One of the crazy times that we watched, was a great example of this was on the 30th. This was Monday when we had the JP Morgan collar trade. And what was fascinating to watch about this is the map from 9:30 is, first thing you'll note is this was one of the biggest strikes you're probably ever going to see. Those of you who know the trade know it is 40,000 contracts of the 5750 strike that was expiring on Monday night. These positions expired on Monday. They were rolled to December 31st expiration. So you can see how big that strike is. It's massive, and it's a 99th percentile strike. So just a beast of a level. And what was fascinating about this is you could see as we move forward in the day, let me zoom in a little here. The HIRO, which is purple, started to drop a little bit, right? And the gamma at this position really started to decrease as the market slid down. And Powell had started to talk right at the same time. And so when the market did this and tanked, everybody was saying, hey, whatever Powell just said was, just awful. And the truth is, see the delta pressure, right? There's literally no buying here. The buying is gone. There's no one to offer support. And you see HIRO right here was tanking. I'll show you HIRO in another lens in a second that really ties this all together. The gamma at the 5750 at that point is gone, right? Because it expires in 2 hours. And then what you see is all of a sudden here, right here, 14:23, give or take a minute, but I put it on Twitter, so it's been timestamped. This is when the new collar got printed. The new JP Morgan trade got printed at literally timestamped the exact low. And then what you see is suddenly HIRO stops going down, the purple line. The S&P starts to bounce a little bit, right? And then you can see this blue, comes into the market really rapidly. That selling pressure is gone, and the market reverts all the way back. So what you get is a real-time understanding of what is driving the markets, the positions that matter, and where the options market is in the driver's seat, right? So if we just go look at HIRO, you can see, exactly how these positions change. I think I was actually looking at equities. So if I put it on S&P 500, you'll see the 0 DTE impacts a little bit more. So see that? This right here, this was, if you go and look at what actually traded, this was 0 DTE puts. So the idea with the JP Morgan trade is that in theory, they have the dealers have a very big long call position on, and they're short futures against it. I think that I was unable to prove this conclusively, and so maybe someone's going to throw their shoe at the screen on this one, but this was absolutely 0 DTE put buying right here, this big line. And it stopped right at 5,700, and it stopped right at the moment that JP Morgan collar trade went up, right? And so what this is telling you is that pressure is done, and then the market gets this relief bounce. So right here, before the market sold off, this person started buying a lot of 0 DTE puts. And I think what happened is then they keep that position on. Maybe they close their futures. They own some cheap, 0 DTE puts, arguably, and then I believe that the JP Morgan broker or market makers, it looked like the JP Morgan collar is owned by some dealers, like a bank desk, and then some market makers. But what's fascinating to me about this, and if for those of you like little mini conspiracies, is they were probably still long the 57 0 DTE calls, the 5750 0 DTE calls. That is the JP Morgan position here. This is at 4 o'clock. So they made, 15 points on a collective 39,000 contracts. That's pretty good business, right? So that's my little conspiracy. But you can see it all play out in real time, which is a really fun thing to watch. And the other point here is, I was not gaslighting. Maybe I was teasing that meet Kevin. I don't think he read my tweets. He's got a huge following, so I can kind of poke fun at him a little bit. But he was like, "Oh, Jay Powell just absolutely murdered us, and that's why the market just dropped." And it's like, actually, I can pretty much conclusively prove that was incorrect. Yeah, JT says UBS likely handles that trade. It could be right. Yeah, Arpit, I hope I pronounced your name right, sir. We find tentative closing price of the SPX through the charm pressure lens. Is it between the dark blue and dark red? What's the logic behind it? It's, for me, it's about balance. So, you know, when you're looking at the market and trying to assess the, you know, the way that flow is going to go, it's about, again, it's about balance to me. And so what that means is, when we have big selling pressure and big buying pressure, you know, the decay of these positions, you're going to get selling pressure here and kind of buying pressure here, right? There's a little more buying pressure here. And so what I think is that the market just finds the natural path in that balance, right? And to be honest with you, you know, you could work this out from a P&L perspective too, right? Because it's not just one dealer or one market maker out there, right? But you know, the decay of these positions is going to cost some market maker, and the decay of these positions is going to cost another, and then you have the customer side too. And so, you know, you'll tend to find these. What's interesting here is that usually you'll have kind of like a blue position here and like a red above. So this seems to be a little lopsided. In which case you'd say, okay, Brent, well, blue means there'd be a little bit of support, red means resistance or kind of negative, and so, you know, this path now seems to make a little bit more sense than this one. But the issue is that we're only at 11:30. And so I don't think that you can really see like fully formed 0DT positions until closer to about 2 o'clock. That's when you're going to be able to kind of plot that path out a little bit better. But again, if you look at that delta pressure map, and if you go back in time and look at it, it's pretty interesting how the market will tend to move to where, you know, this delta neutral spot is. So, you know, you see obviously these strikes above, and as new 0DTs come in, you know, this did move. I guess I didn't think it moved so much on the day, but we've now moved down a little bit here over the last like 20 minutes really since I flipped away, right? So there's clearly some bearish flow coming in here. We could take a look at what that is. So you hit the little play button here. It'll iterate through itself through the last few minutes, and you can watch all the positions change and shift. So it looks like this this position here seems to be possibly getting closed up. Caesar says no giveaway today. We did give away monitors, free SpotGamma tools, et cetera, et cetera. No giveaways today. We are letting everyone try it again. If you haven't tried it, go to spotgamma.com/trace-unlocked, and you can try it out. Brian Emma asks, is gamma setting most appropriate under what conditions? And same for delta. So there's a checklist I go through, and I can walk through that checklist. But, you know, start a day, really anytime you bring up the map, you know, what does that mean? So let's just do it in real time now and see what we can say. So let's say that, forget what I've discussed this morning about different positions. What I'll generally do is I start with the map zoomed out a little bit, right? And I say, okay, where are the big strikes for today? And right now you see there's that big spread down here, and then 5,700. This area really catches my eye, and then, you know, you can see there's this big line here and there. So I say, okay, great. Here's my resistance zone. This is what I'm thinking about that. And then this seems to be a pretty big support zone, right? That's what I'm looking at in the 0 DTE space. If I turn the 0 DT off, you're going to see a bunch of other positions come out, and you'll see there's this put position that I mentioned before, about $10 million, right? So if you get under this zone here, you can argue that there's some local negative gamma, meaning in this area you could possibly pick up some negative gamma, and then I would see this. So what does that mean? If we broke 57.75, I'd look for a quick move down to basically 5,600. So that's the way that I would look at the market right now from a positional standpoint. So, you know, support here, resistance here, based on current stuff, right? So I start with the gamma by strike to get that laid out. The second thing is I go to the gamma map and I say, okay, what's the general condition today? If we're in a negative gamma position, that means that the market's likely going to move a lot. Here we have a positive gamma position. I can tell that because the map is generally blue, violet, purple, whatever the quickest word to say that is. And the stability indicator is 64%. That's fairly high, right? When you had the JP Morgan collar trade on, you know, the stability was much higher. and then you get, $4 billion worth of zero DT deltas on, and things change. But right now, I'd say, look, we're in a stable environment. What does that mean? That means the dips are going to get bought and the rips are going to get sold. And that's my general, probability, right? That's how I'm looking at things. So, okay, stable market, clear support and resistance levels. Well, that means that I'm going to be trying to buy the dips at 5,700 and selling rallies up into the 5,750 area. And if zero DT positions fill in inside of that, maybe I'll change a little bit, but that's the way that I'm looking at things here at 11:30. Then go to the delta pressure map, see where the path of least resistance is, right? We were talking, shortly before here, it looked like it was 57.25. It moved down a little bit, but generally speaking, we're kind of going sideways. You will see times where the delta neutral area is way up here or way down here, and that tells us that there's probably going to be a lot more volatility in the session based on how people are positioned. And then last, as we get into like 2 o'clock, I'll start to look at this charm pressure map to figure out, where specifically do I think things are going to close. And I would also say that we've had some traders come on and say that they found some interesting trades around 2 or 3 o'clock, buying or selling, zero DT positions because they're in theory cheap, right? Or at least they don't cost very much to bet on some decent market movement. And so, you're looking at this wedge and you naturally want to say, hey, the market's going to go up here or down here. And I think that generally makes sense, but I think that this blob in here is going to change probably by 2 o'clock. And so that's just from experience of watching this, that this is probably not set in stone. So these are two very big areas, but I wouldn't be surprised to see that red zone kind of form more like that. So we'll see how the day progresses. So that's how I'm generally looking at things. So if I'm an options trader, do I want to sell put spreads below this or sell call spreads above? Do I sell a straddle thinking that, hey, the market's not going to do much, or sell, iron condor? I can't tell you that because I don't know what options prices are right now. I don't know what your strategy is. So I'm not telling you that. If I'm a futures trader, it's very simple. I'm trying to buy buy support, sell resistance. And the confirmation signal that we can use as, okay, we think this should be support. What's like an extra, pat on the back that this could happen is if HIRO starts moving back up, right? If HIRO either goes sideways or moves up, what does that tell me? It tells me that the people who were just buying puts or selling calls stopped. And that means the pressure is off. Now, if HIRO goes up, that's a good sign because that suggests that they've turned to selling those puts or buying calls, which is an extra tailwind for the market. But sometimes, particularly after a really sharp drop, all you need is that pressure to stop. And then kind of like the really short-term vol that is built up, right, can relax, and that can give us a little bit of a boost. So, it's a very fluid zone in here, as we kind of have moved down quite a bit. But overall, when you just zoom out a little bit, it's a positive gamma environment. It's stable. There's very clear levels that are sitting here. And, so I think you should operate accordingly. And I think, again, the big signal that, hey, there's a risk problem here is if we broke 56.75 again, because we have a couple of net longer gamma positions that I would start to worry about there. Now, one of the issues here is that you talk about the vol space just stepping slightly outside of trace at the moment. The VIX is at 19, and that is basically telling you that implied vol is very high. And that's tricky because the market's not doing much, right? We've just pinned the last, arguably you could look back 2 weeks and we haven't really done much at all. We threatened to break out on Monday night and we crashed down on Tuesday morning, but now we found the same range. And, someone was like, hey, Brent, you said it was going to break out of this range. I totally did. On Monday, we closed above it, and then Tuesday morning we went below it. And now, look, here we are back in this same price zone. So the issue here for bulls is that vol can't fully release. What do I mean by that? Like if implied vol, which is very elevated right now, if you want some proof of that, let's just show you skew. I know we're slightly off the trace topic here, but I think it's pretty interesting. This is 1 month skew. So this is not even yet pricing in the election. It's 11.4. And what you can see is that we're up against the top of this range. See that? The 90-day range. So this is just a rough barometer. It's telling us that implied vol is quite high. Nobody cares about calls right now. Nobody's bullish calls, which is interesting. and there's a decent bid to implied vol. The vol's actually come in a little bit after NFP, interestingly. But it's hard for this to fully release because of the tensions in the Middle East, and then two, the election coming up, right? So, 11.5 vol is going to be even higher. And so there's this stability now in the vol space. And the reason that matters is because I think if we're looking for a bigger directional move, we have to let the VIX, a la the, just as a barometer of the volatility complex, like if VIX can go down to 15, signaling that vol has come down, implied volatility has come down, that lifts the market up, right? This is kind of the Vanna, Vanna flow that people like to talk about so much. So it's hard for us, I think, to sustain a bid with the VIX and implied vol, holding this stable. Now, the flip side of that makes it challenging is who wants to buy puts when the VIX is at 20? Well, nobody, right? So there is a lot of kind of tail hedging going on, really cheap puts and cheap VIX calls and call spreads. So people are hedging the election. They're hedging some of these events, which makes the market a little bit more stable. But, God forbid there's an escalation in the Middle East, that would probably ratchet vol, rather quickly and really pressure the market down. But for now, it's like whack-a-mole, 0 DT. For now, it's like, well, no major escalation, I don't believe, overnight. We passed the data point for today, so I'm going to sell 0 DT puts. So Chris Johnson asks, is the GAMMA index at -3 today inconsequential in regards to a blue trace? Yeah, great question. So we have a GAMMA index here in our core models, and you can see all this data and levels, and we're showing a flat gamma complex, slightly negative there. When you look at trace, what trace is picking up on largely in a lot of ways is 0 DT positions, right? Because those 0 DT positions, they don't exist when we write the note. They don't exist at 3 a.m. when we produce our levels, et cetera. And so, a lot of the gamma that exists today is 0 DTE. And the proof of that is, here's 4 o'clock, and if we cut this off, you can see how much lighter shade of blue we have. And I could hover over this, and you can say, okay, we have $15 million of gamma, versus $57 million of gamma. That's just because of 0 DTE. So, this is really on that cusp of, positive versus negative when you remove 0 DT. But obviously 0 DT comes in, pretty much every single day. So there we are with that. Scott, our good friend Scott Pulcini, excellent futures traders, asks, how do we read into when HIRO gets notionally extreme, like in this case, -$2 billion as far as trace? So with HIRO, it's kind of the rate of change that's most interesting. And so Scott brings up a good point here that, we opened, just looking at HIRO is on this axis. So, you could say, okay, we're around, let's just call it $1 billion. And then we went down to, -$2 billion. So this is a lot of negative deltas on the day, right? That is selling pressure for the market. Now we've realized that move, right? The market, the S&P has gone down, and now we're saying, okay, what is the flow doing now? Well, it's not doing much. I will tell you this, Scott, if we're sitting here at 5,700, S&P is 5,715-ish, right? If HIRO starts doing this, then suddenly I'm very concerned about this holding up as support, right? That's going to be the signal that if I am long here still, I don't want to be long anymore. I'm going to be looking for this area to get tested again. And if HIRO continues to go down on this test, then I'm going to be thinking, okay, we're really going to attack this, these positive delta support lines. So, $2 billion is a lot. And if you go to HIRO, the HIRO signal itself, we put this into context for you. So this is all 0 DT flow today, which to me matters. Again, why does it matter if it's only 0 DTs? Because these people trading today, they only care about today. So once the day is over, well, they were long a whole bunch of puts. Who cares? They expired. They're gone. If it was, let's say that the purple line, is like this, the purple and red candles, and the 0 DT line was like this, it was a 0. I'd be much more worried about that because that tells me that there's longer dated put buyers coming into the market or longer dated call sellers, and that suggests that there could be a longer term pressure on the market from those trades, right? Because if I buy as a trader, 50,000 puts that expire 2 months from now, that is a hedging obligation for a dealer for the next 2 months. So the context or complexion of the flow really matters. Now, is 2 billion a lot? 2.5 billion, we've had negative 5 billion is the biggest over the last 30 days. So yeah, it's a lot. But it's only 0 DT. So if somebody's coming out today and monkeying with the market for 0 DT purposes, I discount a longer term impact. Now, if you're a day trader, it matters. And, a lot of us here are focused more on short term flows. But I get less concerned when I see it's all 0 DTE. And I'm more looking to play mean reversion off of flow when it's just 0 DT as well. Right. The same goes, if we rally and it's because 0 DT call buyers, I like to bet on a mean reversion. Same thing with kind of downside. We can also break this down in here a little bit more. So, what 0 DT people, what were they doing? Interestingly, mostly call selling. So the blue line is puts, and what's been happening now, the green line is calls. So what you see is call sellers came out at those highs. They stopped on the initial test of 5,700. See that? Then when the market rallied to 57.25, those call sellers came back out again. So they're throttling the market rally right now. That's what all of the S&P kind of negative delta flow is, which is quite interesting. So when it's call selling that's dominating the market, you're getting less extrinsic value off of those calls the farther along the market goes, right? Like, do you really want to sell? Like, what is a 57.30 call going to be worth at 3 o'clock if the market stays here? Well, what 5-10 cents? Like nothing. You're not going to sell that. So that fuel is likely to run out. So I don't, at this moment, I don't see any reason that we would break this level. And the only reason that I would say to change my view there is if this HIRO signal continues to just mercilessly, go lower. And then I'd also want to see how these puts change, right? Because if these blue bars move to the right, that's telling me that people are coming in to sell puts now, in which case we probably see HIRO turn and go up. So, these things are all linked together. And even though, we had a pretty nasty sell-off, again, we have positive gamma environment. The delta pressure is just indicating, more or less sideways move. And so, I don't see a reason to want to try to short this right now. If we break 56.75, that will be a different story. Then I think the gamma map changes, and I think pressure then pushes us significantly lower. But right here, I would favor a bounce. Yeah, there's some people have some excellent ideas and questions. We never rest here. We have some new features we want to add to the trace maps. Some people ask to see 2 columns at once, different kinds of things like that. We love feedback as well. So anyone who has any suggestions, we love to get them. Incidentally, if you're trying trace out today and you have some questions, you can hit this. We have live support offered today. And you can reach out and get a hold of somebody. We do have staff there live. It's a real person, not a bot. Give us a little bit of moments here. Obviously, there's hundreds, if not probably thousands of extra people right now, or at least 8,000, trying out the trace demo today. So it may take a minute to get to your question, but we're there. We're going to respond to you. David asks, will it refresh at a faster rate in the future? The answer to that question is no, because there is a data vendor supplying critical data to this tool that provides the data every 10 minutes. We take that data and then we do a bunch of work on it to extract the information we need, update our internal models, and that process is every 10 minutes. Now, HIRO updates in real time, and we have some ways that we're going to speed up some of the data that we're offering, specifically these gamma by strikes. That also ties into will we be offering more products on Trace. Our first step is going to be getting these GEX bars updated for all US listed instruments. That is what we are hot on the trail of doing that. Second thing is you can see over here, we got this options feed tool. So I know I see JT out there, new tool hype. Yep. Options feed coming out. I've used, I think, all the options, feed tools out there, and they're all incredibly frustrating and to be honest with you, the main reason we're building was because I just had it, like trying to figure out like specifically what's traded. I have some behind the scenes tools, but this new options feed tool is just going to crush it. So I'm super, super excited about that. Also, if you're an alpha member, when we were out, we've never increased the price on somebody. Some people have been paying, for years and gotten Vol Dashboard and Trace and HIRO and all these things. And, lucky them, we haven't moved the price on them. And so, as we continue to push out more new tools, there's options feed and another surprise one coming out by the end of the year. Hopefully about a month from now, we'll have those two tools out. And the Trace Gex bars updates. I mean, we're not resting over here. A lot more stuff coming out. Equity Hub is indeed for single stocks. So we have single stock modeling in here, showing you things like gamma by strike, other different positions. If you caught us on the Q&A yesterday, we do 4 Q&As a week. We were talking about Tesla, just to show you the kind of the way that these gamma flows work out. We highlighted these big strikes, right? 250 and 240. So this is where support was yesterday, and we're like, look, call flies into the strike probably makes some sense because the market will generally be attracted for fairly sizable expirations, and we're under that level now. But you can see we tapped that 250 area twice. That's what this big gamma bars. So there's a lot of value in watching these single stock positions, particularly around expiration. So it was cool. Yeah, thanks, Walter. I appreciate that. When are gamma levels available for all stocks? So you have gamma levels now. This is with our current model. We are tracking positions for all equities that's in our databases now. We are mainly waiting on making sure we have enough information. So we have enough longer dated options into our models that we feel like we can offer them up. I am looking at them in the background. They're looking really good. It's looking exciting. And, we're targeting end of year, which is not that far away. You can have your turkey, open some Christmas presents, and maybe you'll find yourself with a new Equity Hub model. No promises, but that is our current target. So this is working out nicely, right? You can see here we bounced, Equity HIRO flat, market rallying now, and this is the, to quote, was it Hannibal from the A-Team? I love when a plan comes together. It's just, we're moving up. Now what do we have here? We have these positive gamma strikes. This looked like a spread before. Let's just check the 0 DTE. I'm going to turn on 0 DTE only. Look at net open interest here. So dealers are long this call, short this call. So that looks like a spread. And you can see it's not huge, 1,500 contracts on each leg. So a little spread there. And it's interesting when it's a spread because that caps the risk, right? And then we have a mix of calls and puts in here, kind of a tepid mix of calls and puts. But dealers are net long strikes in this area. So they should, in theory, be then, offering some resistance in here. With 57.60 being the big kind of monster strike. There's another big strike here, 57.40, right? So a sticky area in here. If I was going to short, I'd probably hoping more for a test of up in this general area, and then look for HIRO to kind of turn over. But that's what I would be looking for on that side. And by the way, there's a lot of people with a lot of different strategies. I know there's some professional futures traders on here. I don't know if Walter's on here. Walter's excellent. Chris Knox, shout out to you if you're watching today. Scott Pulcini, they're professional futures traders. They use this options data to help them navigate the market because the options flow is so meaningful. And you can see the 0 DT impacts every single day as direct evidence, right? You can timestamp that stuff. Tons of different option strategies you can run on this stuff. And so, we're giving you data on how the market is moving. How you want to express that stuff, obviously is up to the individual. Anyone that has questions, Legion Reaver brings up a good point. Hit this I, and you get a 9-page manual on Trace. If you also go to our YouTube channel, most of you are watching through YouTube, so youtube.com/SpotGamma, there's at least a half a dozen videos. The last videos we did were all on Trace. Anywhere in the platform that you go, you will find a video and generally a manual, definitely a video Also, for those of you who are new to SpotGamma, go to resources, hit syllabus, and you will get a video breakdown of all of our different tools. And then lastly, any other questions, Discord's great. We have my boy Blue, JT, they're excellent on Discord, really helpful. And then we have live support, not every day, but when we do these launch days, we're trying to staff live support as often as we can. But you can also email us, info@spotgamma.com, and check that out as well. What's the big red bar at 57.35? That's part of what I think is a spread, just to make sure that's clear. So the dealer is short this call and long this call. How do I know it's calls? Because if I flip to OI, I'm going to net OI. I'm only looking at 0DT right now, only 0DT. You can see their calls. I hover over it. It's a call spread. So somebody has a call spread on. The dealer is short this leg and long this leg. I don't know, what time was this position on? Let's see. So I could keep clicking this little arrow here, hard to see, but you can just click through and see exactly how and when the positions are put on, right? So it looks, I don't know, someone seems to be long this call spread, which is a little bit bizarre, but that is what the position is. Doesn't have to be the same person too, obviously, but you can play those out. All right, that is going to be it for me, as we are at the top of the hour, and my voice is going a little bit here, so we're going to wind that up. Hopefully, the demo today has been helpful for everybody. We walked through a bunch of the different features of SpotGamma, showed you some real-time analysis. We even showed some support and showed how that works. If you go to spotgamma.com again /trace-unlocked, you can check out the SpotGamma tool today for free, Trace. And the feedback again has been just incredible. And those of you who know me know that I don't do a lot of chest thumping around here. So when I say that, I had to be really kind of blown away. So thank you everybody for that. Any questions, you can email us, info@spotgamma.com. And I will be back for our members on Monday at 1 p.m. Eastern time, so we can have a lot more questions answered. Again, thank you to the Simpler Trading crew for showing up for the demo as well. We did an excellent webinar with them. And Henry, I don't know if he's still here, but Henry from Simpler Trading, excellent trader in his own right. So thank you all for joining us from the Simpler crew today. All right, that's it for us. Enjoy your weekend. Hopefully things across the world settle down and we have a nice, calm, peaceful weekend everywhere. And thank you all again for joining me. And again, see you on Monday. Cheers.